All right, so this is why I am personally investing $6 grand a month into the S&P 500. I'm going to break down absolutely everything from the income wise to what I'm just seeing market wise. And first things I want to really dive into is the actual calculator. So this is roughly, I have a little bit more than this in there right now, but I just want to use a simple number for math reasons. 14. The reason 14 years is there because I'm personally 26, so I could very easily see how quickly 14 years goes by, especially these last 14 years. So that'll push me into my 40s. My return rate is 8.5%. So very simple returns say that the S&P has done roughly, give or take, about 10 to 12% the last 30 years. I understand that. I understand past results don't guarantee future performance, but I'm just betting on this. I'm trying to be as conservative as I possibly can, and then kind of rolling it from there. So again, for the S&P 500, for those who don't know, it's just a batch of the largest 500 companies, 500 tickers, stocks, whatever you want to call them, in an index, in a more or less bundle that you purchase with the average returns of them being listed on the stock market. So I'm trying to simplify it as much as I can for those who don't know. Anyone who clicked on this video, you probably know exactly what that is. So I won't dive into that too much. But the math here is really, really simple. Compound annually, additional contribution, $6 grand a month. My end goal for that by the end of this year is $10 grand a month invested. But you can see here, like I have another video on my channel talking about this on how to become a millionaire on a 9 to 5 salary. And by year, it's actually technically year 7.5 ish, right under year 8, my deposits match my interest, which is insane, right? I'm sitting on $1 million portfolio. That's great. But this is what is really just mind boggling to me still to this day. And then you see year 9, my deposits go from 72. My interest is actually working harder than my deposits at that point. And then keep going, keep going, keep going. 116, 132. I don't think this is also factoring in dividends. I don't get much dividends on the ticker that I'm buying, which is either VOO or VFV, but there is a little bit of that kind of ticker dividend, which is awesome. I know that varies, that changes every year. And again, I get it. Like this may, dip a little bit, but look at all the dips, even the March 2020 COVID dip. I know there was the Black Monday in 1987. I know there was the dot-com crash, the 2008 crash, but I'm in an age bracket where it's like, it doesn't really affect me long-term. And as long as, things, they don't even have to stay stable. I will just continue buying more if they do actually end up going even further down. Because I just have a longer term time horizon than a lot of people. A lot of people are freaking out right now, which is kind of my points and what I want to get into, why I'm doing it. One is just diversification and de-risking. My businesses are where I'm going to take all my risk. I'm not a stock picker, right? I'm actually weirdly really risk averse. I don't spend much money. I keep my monthly burn as low as I possibly can. So I'm using the S&P as a hedge, as douchey as that sounds. I know a lot of people put their whole retirement plan and focus into the S&P and into their investments, but I know what it's like to scratch your two pennies together hoping it turns into a dollar. It just, you need to raise your income. I'm a big proponent of, if you don't get involved in business, get involved in some high income skill, which we'll talk about in a couple seconds, but it's just my backup plan. This is me every month taking a little bit of chips off the table and throwing it into just something safer, something more easy that I can understand rather than complex businesses and ads and employees and marketing, whatever, right? So I get it. Again, past performance doesn't guarantee future returns, and people are freaking out about stuff. But I just think long term, I'm not interested in betting against. It's supposed to say betting against America. I'm not interested in betting against Musk, Zuckerberg, Sam Altman, all these big tech executives. And yes, do I understand things are overinflated? For sure. But with that overinflation comes this huge opportunity of, I know it's a buzzword right now, but AI. Like I understand that, right? It's tough for people to conceptualize. And me being like, I try to put my business hat on more times than not, because I think it's made me a better passive investor, if you will, of like understanding what these businesses are rather than just blindly investing, right? So I'm not interested in betting against the US, even though I'm Canadian, funnily enough. I think I'm super, super bullish on the US in the next couple decades. So that's why I'm viewing it that way. Number two, it's just simple, man. I've done real estate properties before. It's not easy. This stuff is so passive, so liquid. It's dead simple. I do wake up every day and I can know my exact net worth down to the penny, liquid net worth, if I wanted to. And I could liquidate it and have it in my checking account within a day or two, right? It's so simple to understand. It's simple to operate, allows me to have more clear mental, energy and mental room for my day-to-day companies, for all the conversations that I have to have with employees, with, future partners or whatever on that involvement and that stuff. So again, it's easy. And I like just having that freedom and traveling too. I could travel and I don't have to worry about tenants, or I don't have to worry about rent not being paid. It's like, dude, this is just the most liquid, most solid, in my opinion, form of an investment, if you will. Not financial advice, but it's what I'm doing. And I don't know. That's why I'm so interested in it. Number three, this is the most important: compounding. The beautiful thing of compound interest. And this is why your money works harder for you. And I've seen so many people make a shitload of money and they just burn it on the dumbest things. And especially young guys, where, I'm in a similar age bracket where, especially people 20, 21, 22, they want to buy that Lambo. And it's like, dude, your investments could pay off your Lambo. Your investments, you don't have to worry and work for money again if you just get your money working for you. So again, I don't want to eventually depend on fully the cash flow from those businesses, because they're high risky. There's churn involved. There's customers leaving. There's customers canceling. But I know I'm confident being able to get customers, but I don't want to be on that hamster wheel, right? So I want to depend on my assets, my portfolio that I've built up for decades when that time comes. Most people can't say that, right? I know, again, a ton of people who do the honest opposite and just aren't smart. So again, quicker video than my normal ones, but how can you do the same? I guess you need more disposable income, right? And that's the number one thing. And if you even don't want to invest in the S&P, if you want to invest in something else, like how do you just get more disposable income? Like I said earlier, you need high income. I personally started with sales. You can do a million things in this world: TikTok shop, drop shipping, agency services of different services. I personally do lead generation. So that's a big one. That's how I get my cash flow. Dude, there's a million ways of how to make money. 10 to 50 grand a month is not a stretch at all. Think of the billions that circulate, trillions that circulate this economy every single day. Like it's really more a mindset thing in the beginning. It's not easy, I would say, but it is extremely simple. So just find what you like or what you're good at and then kind of take it from there. Number two, keep monthly burn as low as you possibly can. Stack your first 100 to 200 grand liquid. Don't even necessarily worry about investments till that point. Invest all in the beginning of you, right? You are a vessel. You are someone who could soak up as much knowledge, and you investing 10 grand to learn how to make 100, 200, 500, that's going to be a way better investment than, throwing away some money into the S&P. If you're really business and ambitious, that's what I would focus on first. So then slowly start taking advantage of your tax advantage accounts once you get there. Number three, this is arguably the most important. Once your cash flow is stable, your burn is low, you get those as far apart, your monthly expenses and your cash flow monthly, as far apart as humanly possible. This is what I focused on. That is when you start piling more money into your investments. So you can get your money working for you, take some chips off the table every single month, no matter what. And you're bound to be more successful at that point. I don't see a world where if you do that for even 5 years, 10 years, you're learning the habits, you're building the habits, you're learning ways to make more money. You'll never go broke again. This is why I like sales. I know it's cheesy and I'm biased, but sales, it's like I can sell myself out of any situation, make money along the way, and make sure my family is protected and myself are protected forever. So a little bit of a ramble there, but if you have any questions, comment below. If you like the video, please subscribe. I'm going to be posting a lot more like this. I just wanted to talk more about my personal situation of investing right now. I think it's super important. I'm a nerd for it. And, I hope you keep crushing it. If you've made it this far, I want to see you win. Thank you for watching. We'll see you in the next one.